Good day, guys. Uh, this is trading arbitrage opportunities with carbon pots. So, last week, which was on a Friday, I believe it's the 25th of July. You can check the date here at the bottom. I believe it's the 25th of July 2025. We talked about uh, this market was in a rally, and I was talking about the spread and how large the spread on pound SGD is. So I was talking about those who might buy it, and I said I was expecting the market to at least drop below this level. At this point, I'm expecting the market to at least go below this level because uh, what we see here is a compression. And after a compression, what we get is an expansion. A compression normally uh, remains within the trend lines, and an expansion is a break out of those trend lines. And normally, when we get a break at the bottom, we also get another break at the top. So let me show you on the 1 hour time frame so that you can remember the movement that we had here, that bullish movement. And I said it's a close of a weekly candlestick. Let me show you on the, this is the daily time frame. Let me show you on the 1 hour time frame. Uh, two candles that we have. These are the two candles, and the market actually moved higher. I think I should label it for you so that you can see it. Let me label it for you. This is the piece that we were talking about, and I was talking about how large the spread is. Let's go back to the 1 hour time frame. So this piece was these two 1 hour candles and the other small candles. So we're talking about those who want to buy it, that they should move their stop loss to break even. But the spread is too big. There's a high possibility that you might get your 2 cents up here. You might get a slippage that will put you in, even if you enter at this level. You might get a slippage that will put you into profit from this level. And only this piece might be your profit because of the spread in the pound SGD. And I talked about my expectations where I was expecting the market to drop below this level. That was on episode 3. So this is episode 4. This is our fourth episode. And I am talking about, this line was over here. I'm talking about my expectations that I'm looking forward to an expansion out of this trend line. I'm looking for an expansion out of this trend line. And the reason why I'm expecting the market to move to the upside is because fundamentally the pound is stronger than the SGD fundamentally. And I think I need to explain what fundamentals are. Fundamentals are not the what are those things that we call your CPI, and that those are not the fundamentals. Fundamentals are the general economic outlook of a currency. Those are fundamentals because we are not only looking at the global outlook, we are also looking at market sentiment and the things that are happening, like sanctions and on wars. So those are fundamentals because they give you the global outlook on a currency. And CPI and those other things are just news releases. So most of the time when we talk about fundamentals, people keep telling us about uh, do you trade the CPI, this and that on the 1 minute time frame. This is at the daily time frame. My trades are visible on the weekly time frame. On the weekly time frame, that's where I'm able to see what's happening fundamentally, not with those news releases. So I just wanted to explain that. So this movement is a rally based rally. A rally is when the market moves to the upside. That is a rally. And a base is when the market moves sideways. This is the base. And then we're going to get our second rally. Our second rally that is up here, which is where the market will give us a rally higher. So what this is, let me remove those things. What happened? The reason why I did this is because fundamentally the SGD is getting weaker and weaker, and the pound is getting stronger and stronger. Fundamentally, and with fundamentals, there are no guarantees because you might look at this and say fundamentally this will happen, and then there are those economic events called ad hoc events, unexpected events, where you hear stories about Russia bombing Britain and Britain. So once you see Russia bombing Britain and it's a beginning of a war, another war in Europe, what will happen is that I'm going to look at the military spending. If I get a spike in the military spending in the British pound, my expectations on the pound are going to change from bullish to bearish. Now I'm going to expect a different outlook on this currency. So for now, because we did not, I'm hearing rumors about Russia making a few explosions in Britain, but I'm not sure about those. So these are fundamentals. We're talking about wars, market sentiment, the global economy, sanctions. Those are what we call market fundamentals. And that's what I look at. I don't look at CPI. I don't even know what happened with the CPI. Uh, I don't know, uh, previous week or what. I don't look at those things. What I do trade is the economic events that I'm talking about, the strength of an economy and the weakness. I look for, because our trading is about trading arbitrage opportunities is about looking at a stronger currency and combining that currency with a weaker currency. So we want an economy in Singapore that is deteriorating and collapsing like the dollar. And then we look at the pound that is improving in terms of its global economy. Today, the pound is doing all of those sanctions that I told you that they were designed to destroy the dollar. So we are still going to have another weaker dollar in the next 3 months, and we will see what will happen in the economy of the pound. So at this point, I'm expecting a break below this level. Maybe we might get, let me use this horizontal line. Maybe, let's say we get that break below here. I'm expecting the market to at least drop below this level. From here, I'm expecting the market to drop below this level. This is just the replica of what I'm expecting here. So I'm expecting it to drop below this level. If I get that, then I'll hold my long position here, which is a rally higher, which might give us a replica of what we see here. The distance that we have from here up here is the distance that I'm expecting from here up here. So that's the system that I use for trading these currencies. That's why we call it a rally based rally. Those are the expectations that we have in uh, the arbitrage opportunity that we are looking forward to taking in the pound SGD. We'll look at other currencies, and we're having a pullback on silver and the dollar. What we are chasing here is a positive carry. We are looking for a positive carry because we are carry traders. Thank you guys for this video. I apologize for uh, surpassing that 10-minute target that we have. And I'll see you. This is the fourth episode. I'll see you on the fifth episode. Goodbye.